Australia's largest bank announces a drop in profit, but is confident the Australian economy is on track for a soft landing. The local share market falls on fears that inflation might be around for a bit longer, and how Indians celebrate Valentine's Day. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Thursday, the 15th of February, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show today, you have a really interesting interview with Michael Brennan, he is the CEO of the Economics Institute E61, but he's also the former chair of the Productivity Commission.
Yeah, so we talked to him all about employment markets and why people aren't shifting around as much as they used to. It's a bit surprising given the strength in the labour market. You would think with unemployment so low, people would be taking the opportunity to find different jobs, get pay rises, all that sort of stuff, but it's not really happening. It is to some extent, and certainly if you do shift, you do end up with more money normally. But we talked to Michael about that, what it means for the economy, and of course what it means for productivity.
Yeah, it is a really interesting conversation, even down to the fact that their research shows exactly what the average kind of increase to income is if you do shift jobs, and then goes into those reasons as to why people aren't doing it, even when the numbers are right there. It is a good chat. It is well worth a listen after the show, Sean. But the main story this morning, Australia's biggest bank announced a 3% fall in profit on the back of lower profit margins from intense competition in both the mortgage and deposit markets. That sent Commonwealth Bank's share price down 3%.
Chief Executive Matt Comyn said the lower cash profit reflects cost inflation and a competitive operating environment. Lower net interest income, that's the difference between what a bank pays on deposits and receives on loans, that was lower, but it was offset by higher fees and market trading. Expenses were up a bit thanks to wage inflation. One of the surprises in the sector in the final 6 months of last year was Commonwealth Bank's decision to cede market share to competitors. Turns out that home loan balances fell by about $2 billion during the half. That's about 100,000 customers leaving the bank. 100,000 customers. Pretty amazing. Of course, it wasn't as competitive as others like ANZ, mostly because it was pushing to maintain profit margins. The bank did pretty well in business banking, though, and it grew its market share of deposits. Matt Comyn said that Aussie banks have passed through only 85% of the rise in official cash rates, and that is because of that competition. Now, of course, there was a November hike that'll be passed through in coming weeks. He also said that while the Commonwealth Bank received $8.9 billion in interest payments from its customers, it paid out $6.9 billion in interest on deposits and another $3 billion to wholesale lenders.
Sean, because Commonwealth Bank is just so big and because it has so many customers and kind of such a very good perspective on what is going on, it's always interesting to hear what Matt Comyn has to say about the bigger picture. What did he say about the economy?
Well, he said people are still getting used to higher interest rates and cost of living pressures, with many cutting back. He said the November rate rise from the Reserve Bank, which people are now feeling, I mentioned that a moment ago, is likely to be the last increase as the economy slows, and that will be a challenge for customers dealing with that final increase. But he remains confident that the Reserve Bank can engineer a soft landing for the Australian economy. This, Michael, was a solid, if unspectacular, result. Now, investors have been pushing up Commonwealth Bank's share price for weeks, peaking about a fortnight ago, even though many bank analysts who make a living thinking about banks and what they're worth, many of those think that Commonwealth Bank was overpriced. It also means the dividend yield, which is much loved by retail investors, has really come back as the share price has gone up. This wasn't really a result that matched all the hype, to be honest, and that's probably why Commonwealth Bank's share price finished nearly 2% lower.
All right, well, that was Commonwealth Bank. How did the rest of the local market perform?
Earnings. Let's start with the market itself. The S&P ASX 200 tumbled on opening and then spent the day regaining ground. Eventually, it finished off 0.7% to 7,548 points. Disappointing inflation news in the US drove the weakness. We'll talk about that in a moment. Fortescue Metals Group and Westpac both dropped more than 2%. CSL, National Australia Bank, ANZ, Transurban, WiseTech Global, QBE, REA, they all fell more than 1%. That is a widespread fall. By the close, the tech stocks and financials had done worse. Plenty of earnings. Can't go through them all, but let's just pick some highlights. Online real estate group Domain share price fell 2.6% after it said listings were below major rival REA Group. Now, a recovery in property sales boosted profits sharply in the December half, helped by strong interest in Sydney and Melbourne, as well as significant price increases. However, total listings on Domain were down nearly 2%, whereas REA's listings were up 4%. Hence, it was sold off. Fletcher Building, shocking day. Its share price tumbled nearly 9% yesterday. The chair of the company and the CEO will exit, and the group wants to sell its underperforming Tradeline business in Australia. Fletcher, which trades both on the New Zealand and Australian exchanges, announced a heavy half-year loss yesterday, sent that share price tumbling. Big investors, in response to the departure of the chair and CEO, said it's a good idea to have fresh eyes on the business. Clearly, the big investors wanted the chair and the CEO to go. Contractor Downer EDI lifted its net profit for the 6 months to December, sending its share price up 12%. Been a very tough period for Downer, with revelations of accounting irregularities, profit warnings, and the New South Wales corruption inquiry. Boss Peter Tompkins said the contractor was tackling poor performing businesses and flagged stronger profit margins in the second half. IDP Education said revenue was up 15%, pre-tax earnings were up 25%, that helped its share price jump 9%. And finally, Seven Group share price jumped 6.6% after it upgraded its full-year profit outlook. So it's got a big interest in Seven West Media, which is not doing very well. However, its industrial services business is doing extremely well. Westtrack in particular, Coates and Boral, they're all doing pretty well. In the end, that helped Seven's share price.
So many results.
So many.
How do you pick? How do you choose? Because there were plenty more that we couldn't get to. There's just really some standout stories, aren't there?
Yeah, normally you sort of go by whether people are going to know about them and what happened to their share price. So all those ones I talked about then had big jumps in share prices, and a few more to come, a few more earnings results to come in this show still.
Do you love this part of it? For a business journalist, it must be both an enormous amount of work sifting through all of this, but also quite exciting to know that there is going to be a plethora of stories.
Oh, yes. There's never a shortage of stories, but you always feel you can't get to the absolute nub of many of the stories. Some you can, but others you just don't have the time to give it enough attention. That's why you rely on investment analysts and people like that to do a lot of the work for you, to be frank.
And bonus points for using the word nub. It's kind of funny. What's happening in international markets, Sean?
I mentioned those inflation figures in the US. They were higher than expected, and it's pretty much pushed back the date of any interest rate cuts in the world's biggest economy. The annual US CPI fell to 3.1% in January from 3.4%, but analysts expected it to be 2.9%. Certainly it isn't a bad number. The thing is, the underlying figures suggest inflation might actually be picking up a touch. That gave pause to debate about rate cuts, and that sent the benchmark S&P 500 down 1.4%. Bond yields rose. Consensus is now that the first rate cut in the US won't be until the middle of the year, probably July. Given the US is in the centre of the economic universe, the news had impacts across asset classes. For example, the Aussie dollar fell back to 64.5 US cents. Also, the rule of thumb is that the Australian economy is about 6 months behind the US economy, so a stutter in the downward trend in underlying inflation also hit the local bond market, with investors now pricing in a rate cut not until December. Finally, Bitcoin probably should have retreated after those US inflation figures. It held fast, still trading above 49,000 US dollars a unit. Very, very big news in financial markets 24 hours ago, those US inflation figures.
Yeah, it's a big day overall, Sean. We've got plenty to cover. We'll be back in a moment with the rest of the day's business news. Sean, Treasury Secretary Stephen Kennedy fronted Senate yesterday saying there is an historic opportunity to hold the unemployment rate in the low fours on an ongoing basis. And that would be, quote, life-changing for many disadvantaged Australians.
Yes, we haven't had that since the 70s, probably. Dr. Kennedy said inflation is on track to drop to 2.75% by the middle of next year, and that there's been no evidence of a wage price spiral emerging and no evidence of a change in inflation expectations, according to a report in The Australian. He said it provides further confidence that the unemployment rate can be maintained at levels previously thought unsustainable. January labour force data is out today, of course. Dr. Kennedy says that the redesigned Stage 3 tax cuts were the most appropriate way of delivering cost of living relief to Australians without stoking inflation. And he said a second straight budget surplus is more likely because commodity prices are higher than assumed in the mid-year review late last year, helping boost government coffers. Good news all around, Michael.
Sean, before we leave politics, can I give a quick mention to a story that we've talked a fair bit about this week, and yesterday's interview with Innes Willocks from the Australian Industry Group has actually sparked quite a response and quite a reaction. What we've done is put on our LinkedIn page, which is if you go to LinkedIn and search for Fear and Greed and follow us on there, you'll see it on there. We've put a poll on there because there was a comment that Innes made during the interview, where he says that the right to disconnect legislation, which was the legislation that we were really talking about, the workers having the right to ignore calls and emails and messages, etc., from the boss after hours. And Innes was saying that it'll kind of kill productivity. It will really damage all the flexibility that is now in workplaces. And one particular thing that he mentioned was that there's particular concern about how younger people will take up this right and utilize it. So we've asked in a poll on LinkedIn, basically, do you agree? Are you concerned that younger workers might essentially exploit this legislation? And at the moment, it's sitting at about 50-odd% for no, 30-odd% for yes, and 15 to 20% for people just unsure yet how it's going to play out. But really interesting that it's concerned about a particular demographic.
Yeah, that's definitely interesting. I mean, it's interesting that Innes said that to begin with, but just the fact that so many people are worried that younger workers will think of this or treat it differently than other workers.
Yeah. So anyway, head along to LinkedIn, head along to the Fear and Greed page on LinkedIn, and let us know your thoughts on that one. I'd be very interested to see what you think. Sean, Chief of the Defence Force, Angus Campbell, has acknowledged Defence is falling a long way short of meeting recruitment and retention targets, but says that steps are being taken to boost the number of personnel.
He told a Senate inquiry that Defence was 4,308 personnel below its authorised strength, and low unemployment rates often correlate to low recruitment rates. Meanwhile, Defence Department Secretary Greg Moriarty admitted his department needs to continue making strides to achieve excellence, following criticism over the weekend from Defence Minister Richard Marles.
Sean, tens of thousands of homes and businesses in Victoria are still without power 2 days now after wild storms brought down transmission lines and damaged power poles, triggering a shutdown of the huge Loy Yang A power station.
Emergency crews are battling challenging conditions to clean up damage and restore services after storms late Tuesday. Premier Jacinta Allen said that one person was killed and at least 5 others were injured in the storms. The Australian Energy Market Operator said the number of properties without electricity was down from a peak of about 530,000, but it warned it would take time to repair damaged power lines and poles. AGL worked to restart its Loy Yang A power station in the Latrobe Valley after the generator tripped or automatically shut down amid the sudden loss of customer load when transmission lines came down. The power station should be fully back online today.
One-time blue-chip company AMP's share price jumped 11% yesterday after the group said it would return more money to shareholders through either dividends or share buybacks.
AMP nowadays is worth less than $3 billion and its shares trade around $1 or so. It's a far cry from 20 years ago when one share was worth about $14. Chief Executive Alexis George announced a fall in net profit on the back of $99 million to settle a financial advisor class action. There's also $51 million in restructuring costs. Take those out, and profit was actually higher. Ms. George said her priorities are to drive a sustainable business, right-size the cost base, which I reckon CEOs speak for downsize the cost base, and find new sources of revenue. Nowadays, AMP has a bank, which is struggling with profit margins, a wealth management business that provides superannuation, retirement and investment products. That business posted a much higher profit. Good news, finally. And AMP also has a financial advisor business that lost money last half.
And finally, Sean, GrainCorp's share price tumbled 12% yesterday after the group said profits would tumble on the back of much lower grain production across Queensland, New South Wales and Victoria.
The group announced record profits last year, so the comparisons this year are pretty tough. The East Coast grain handler reckons this fiscal year's profits will be around $80 million, down from $250 million last year. Chief Executive Robert Spurway said things were getting back to normal in terms of crop sizes. He has a point. ABARE has forecast that this financial year's East Coast crop will be about 21.7 million tonnes. The 10-year average is 21.6 million tonnes. So things are back to normal.
We spoke to Robert Spurway, I think it was last year.
We did,
and
yeah.
It was such an interesting conversation about an industry that is really so dependent on the weather, which is something over which you have very little control.
Yeah, totally. Fascinating chat, that one. Robert Spurway, check it out. Search us.
Yeah, absolutely. Now, Sean, turning to international news, Indonesians went to the polls yesterday to choose a new president for the world's third largest democracy.
Defence Minister Prabowo Subianto is the front-runner over two former governors to succeed the still popular Joko Widodo. Indonesia is on the verge of becoming a serious player in the global resource supply chain. Local nickel miners are already feeling its impact, with nickel prices slumping on the back of a flood of product from our northern neighbour. Mr. Prabowo says he will continue the policies that encourage Chinese investment in Indonesian mining, and that, of course, has implications for Australian miners. Mr. Prabowo is a former Special Forces commander, and his running mate is the 36-year-old son of President Widodo. That's helping. Voting across the archipelago of 17,000 islands with a population of 270 million is a logistical nightmare. White ballot boxes and ballots have been brought by donkeys and on foot in some of the more remote locations. Literally, nearly 259,000 candidates are contesting about 21,000 posts in the world's biggest single-day election.
That is quite extraordinary. Just those numbers are hard to get your head around.
Yeah, phenomenal.
Finally, Sean, something a little bit lighter. It was Valentine's Day yesterday. And while, some always kind of get a bit upset at what is fairly overt kind of commercialism around what is pretty much just an arbitrary date in the year. Our local celebrations compare somewhat poorly to India, where they go all out for a full Valentine's week.
So it starts on February 7 with Rose Day, then Propose Day on February 8, Chocolate Day on February 9, Teddy Bear Day on the 10th, Promise Day, whatever that is, on the 11th. I promise to love you. I really do. Hug Day on the February 12th, Kiss Day on the 13th. Finally, you get to Valentine's Day on the 14th of February.
God, Sean, I've got to say that that does feel like there's a bit of a build-up there.
It's one way of putting it, Michael, one way of putting it. No one is quite sure why February 14 is Valentine's Day. It might have been when St. Valentine was executed for secretly marrying couples to stop the male going off to war. Might come from the Roman festival of the 14th century. Whatever it is, it certainly resonates in India. Gifting platform FNP delivered a record 350 roses a minute ahead of yesterday. Food delivery platform Zomato was dispatching 406 chocolates per minute, according to Bloomberg. I don't know who comes up with these statistics, but I'm loving them. And retailers in India, they're loving Valentine's Day as well. It's kind of become a flagship event.
Did you do anything romantic for Jackie?
Yes, more or less, sort of. What about you and Sean?
No. And I shouldn't have asked you, because then it just meant that you were going to ask me, and I have to admit that
Sean, I know you listen.
No, but what we typically do is then we will go out for dinner in like a few days' time, or out for lunch or something, and we will use Valentine's Day to justify it. We will say, this is instead of doing Valentine's Day.
Yeah, is that like when you go to bookstores and you put little stickers on shelves of bookstores telling people to read your book and vote in the top 100 books of the year?
Yes, actually it is. And Sean, fantastic segue and completely unplanned. I suspect that you're referring to a video that I posted on my own LinkedIn, and I will share this on the Fear and Greed LinkedIn as well, just because why not? It was when my book, How to Be Remembered, was published last year. Sean and I went into Big W stores and because the book was being sold in there, and put little kind of signs all over the books and things. And we made a video and posted it on there. It was actually, you know what, Sean, I'm going to do this because you brought it up. betterreading.com.au. I'm going to put a link in today's show notes. I need every single person who listens to this podcast to vote for me, because it will get my book back onto the shelves of Big W. So I don't want to beg, but please
Please.
Actually, that was just straight up begging. Hey, very quickly, very quickly before we go, a quick mention of one of our very, very fine supporters here on Fear and Greed. Blue Chip Communication powers financial services companies with PR and marketing. Maybe I should have asked Blue Chip to do my marketing for me, to try and get people to vote for me in the Better Reading Top 100 books, to vote for How to Be Remembered.
What they have got me onto is Voodoo X Coffee, and I've become a fan. In fact, I've gone back to making. We've had this discussion, right? I quite like the routine of going to the coffee shop and buying a coffee and things like that, and I've had a coffee machine for a while. However, now that I have this Voodoo X Coffee, I'm not saying every time, but during the day particularly, I'm much more likely to actually sit there and make myself a coffee rather than go to the coffee shop. There you go.
I thought you were about to say that because you've had your coffee, you're much more likable.
Oh, possibly.
Which I would actually probably agree with. I mean, as someone who encounters you very early in the morning, I've got to say there is a noticeable difference in post-coffee Sean compared to pre-coffee Sean.
Yeah.
All right, let's wrap this up. Up next is the daily interview. You are speaking with Michael Brennan, CEO of E61, and someone you don't get to speak to very often because a former chair of the Productivity Commission. And of course, you asked him about productivity. It would be a missed opportunity if you didn't.
We did, and all about what's happening in the employment market. We actually asked him about some of these new laws coming into and what they mean for employment markets and flexibility and productivity. And we stayed away from the politics of it, but Michael had a very interesting answer to that particular question.
Yeah, a really interesting chat. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 15th of February, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X and Facebook. I'm Michael Thompson and that was Fear and Greed Business News. Have a great day.